everyone, myself Vaibhav. In today's session of Visual Jforex, I will be continuing with the algorithm development demonstration using the indicator ADXR, the Average Directional Movement Index Rating. This is a smoother version of the ADX, and in today's session, we will be completing the sell side logical build. In prior sessions, the setup has been completed this far where the instrument subscription has been done. The default instrument is Euro USD. Then the position amount defined at 0. ADXR block to look at the ADXR values and draw necessary inference. To look at the volatility, to get historical candle blocks have also been used to pinpoint the exact entry and exit point. The 10 seconds candle will come handy. Then I have also defined the condition that there should be at least more than 7 pips of volatility. For that, these calculations have been done. And then on the lower side, I have added these logical requirements which need to be fulfilled prior to the execution of the buy trade. And in last session, I had added this buy at market order block. But in this, we are going to define two input values in today's session, but we will not do it straight away. First, I will complete the sell side if else structure, and afterwards, we will come to the defining of those two input values for the market open block. So let us now get started for today's session, where the sell side logical conditions will be put in place. So for execution of any sell trade, we need the ADXR values to be on the rise. This is the USD chart, so I will make it to Euro USD. We need the ADXR values on the rise, and it should be in the range of 25 to 35. That means it should be above 25 and below 35, and it should be higher compared to the ADXR values 2 hours prior to the closing of last hourly candle. So we will be doing the comparison for that. And then we also look at the price action. So we need, after having seen some correction where the last candle has closed with losses, that is its closing value is below its opening price, and as I had said, we also have defined one more condition, which means that the difference between the closing and the opening price should be greater than 7 pips, and prior to this candle, the penultimate candle of the hourly time frame should have closed with gains. That means its closing price was above the opening price, and after that the reversal is taking place with good enough momentum. And also we need the closing price of last hourly candle to be below the lowest price of last hourly candle. So I think somewhere here, let us see if the conditions will be fulfilled. 5 GMT, so this is 6 GMT, and I think at 6 GMT the ADXR value crosses above 35. So this time around it won't be fulfilled because of ADXR being higher, but hourly formation is just as per our requirement. I think we will have to look at the difference if it is more than 7 pips or not. So if it is, then the condition apart from this ADXR requirement, all other conditions are pretty much in place. So now we head back to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. First, we will have to add the new calculation expression block and take into consideration the difference between the last hourly closing and the opening price. We need the closing price to be below the opening price. That means the difference or the result of the subtraction of the closing value from the opening value should be more than 7 pips. And for that, let us take one mathematical component. So here it is. I will disconnect the flow here and join it. Now candle 18, candle close. Open price and the closing price. A1 minus A2, and this will be sell side difference. Okay, and now for the time being we are not going to define the stop loss and take profit values, which are going to be kept dynamic. First we will complete the sell side. So again I am joining it here, but we will have to disconnect it later on. Okay, so now I am going to take a couple of if blocks. Alright, we need ADXR values to be on the rise, so ADXR 13 needs to be greater than ADXR 17. That means momentum is on the rise. Then ADXR value needs to be above 25 but below 35. So first input greater than second input. Then again the ADXR value of look back period 1 on the hourly time frame needs to be below 35. Okay, so first input less than second input. Then we also have to look at the difference of the last hourly candles open and the close price. For that we need the difference to be greater than minimum defined difference of 7 pips. So again now I have to add these if blocks and this one needs to be greater. Okay, then we want last candles closing level to be below the candle 19's lowest point. So for that we will have to take candle 18 candle close and compare it to candle 19's candle low. Oh. Okay, first input less than second input, and also the penultimate candle, which is candle 19, should have closed with gains, that is its closing price was above its opening price. Candle 19 candle close was above candle 19's candle open. Okay, so far this looks all fine. Alright, so here we take these blocks to where they belong, that is on the lower side. And now we have to pinpoint the entry point. We have to make sure that the setup is symmetrical. The sell side requirement should be inverted conditions of the buy side requirements, and same numbers of if blocks should be used to make sure it is symmetric. Okay, now is the time to pinpoint the exact entry point for the sale order, and that is going to be when the price starts to dip below the last hourly candle closing price. So we have to take two more if blocks and compare candle 20 and candle 21's close with candle 18's close, and here we need the candle 21's close to be above the candle 18's close, and candle 20 candle close to be below it. Alright, let me join this. Candle 19, which is the hourly candle with look back period of 2, its closing price needs to have been greater than the opening price, and then candle 21's close was also above the candle 18's close, and candle 20's close needs to be below candle 18's close. And now we take the open at market block. This is going to be a sale order. First input less than second input. And this, I think 0.1 million should be good enough. Slippage 2 pips, and for stop loss and take profit we will create new variables for buy side also. Okay, I am going to take both these blocks higher where we will define these variables. Okay, so for the buy side, the stop loss is simply going to be the difference between the last hourly candle close and opening price. So whatever is the difference of that, we will simply keep that difference to be as our stop loss after looking at the pip value, as we have to define these variables, both stop loss and take profit, in terms of pips. So we will have to take that calculation and change also its data type to integers. So for that, the actual difference for which we have already done the calculation is this ADB, and whatever the difference is, we will have to multiply it by a pip conversion factor as 0 USD. Pip 1 pips is after 4 decimal points, so we will have to multiply this actual difference by 10 raised to the power 4, and then only we will get the difference in terms of integers pip value. So for that I have to create a new variable peak conversion factor, and this is going to be 10,000. Okay, this will be A1 into A2, and this is going to be buy side stop loss. I will create a variable here, stop loss. Okay, all right, and the take profit is going to be simply the twice of stop loss. So again, whatever is the result of this calculation, we will simply take that, create a new variable, take profit conversion factor is going to be twice. So we take again the A1 into A2, and this will be by take profit. Okay, so we have now these conditions, these newly created variables. I think here I have done a mistake. This variable needs to be of integer data type, so I will create the integer data type variable here. Okay, by take profit, and now I think yes, it is all right now. For the sell side, we will have to carry out similar exercise where we will be looking at the actual difference when the sell side conditions are in place. So for that, we will take this result of the calculation, multiply it by peak conversion factor, which is 10 raised to the power 4 A1 into A2. Okay, and this is going to be side stop loss. Alright, we have defined this stop loss now. One more calculation expression is needed, and now we take this result of the calculation and multiply it by take profit conversion factor, which is 2, and this will be A1 into A2. This will be sell side take profit. Oh, similar mistake. Let me see if I can change its data type. Yes. All right. No. It is not actually changing, so I will change the variable itself. Sell side. Okay, and this will be result of this calculation, which is simply the twice of the stop loss. Okay, so I think you have been able to understand what I have done here. I have simply made the take profit and stop loss dynamic. So depending on the volatility for the given instrument, the stop loss and take profit will be defined whenever the order is placed for buy trade or sell trade. I will join this. Okay. And now we have to take these two execution blocks where they belong, and I will also color code it to just be sure that all the links have been joined and trade flow is going through. Okay, yes, all looks good. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. I would suggest that you do historical testing using the Jforex platform, where you can export this file and run it on the data for last many years to see if the idea is really profitable or not, or you can even carry out some changes. So I would suggest you try out the algorithm development on your own and see how it goes. That's it from my side. See you next time. Till then, goodbye.